Hello, my name is Marcus Ibrahim with Team Ibrahim at eXp Realty. Today I'm going to walk you through our full buyer's guide, how to buy a property from A to Z in Southern California and what to expect along the way. Let's get started with a step-by-step overview of the entire process, and then we'll talk about our team and the experience some of our clients have had with us. So number one, getting ready is the first stage. Secondly, we search for a property together. Third, we'll open escrow. And fourth, close on the house that you love. When getting ready, we recommend that you create a wish list and get pre-approved. That's the first and most important thing so that you can search for a home or be ready when you're ready to write an offer on a home. When searching, we will set up a search for you. We recommend that you mark your favorites. We will help you tour those favorites in person. We will write a CMA, which stands for Comparative Market Analysis, for you. And then you'll make an offer, and when the seller accepts it, we move to this third stage, which is opening escrow. And then you'll do a home inspection. You might request some repairs. You will finalize your loan. You will get home insurance. You'll remove your contingencies. You will do a final walkthrough. You'll sign your documents and you'll fund your down payment. Lastly, once you're done and the property is closed, your deed will be recorded publicly with the county recorder of deeds. Escrow is closed, you get your keys, and you'll move into the house or home or townhome or condo, whatever it may be. So here is a fun map that I had my team create to show you a visual of how the process looks. In the very beginning, you're going to be doing your wish list and getting your pre-approval with your lender. That's crucial. Then we search for a property within your budget, but you can only figure out your budget after talking to your lender, unless you're paying cash, which is totally cool. But the lender, if the lender tells you you can only afford $800,000, why look at $1 million homes, right? You need to have a budget first, or $2 million, $3 million, whatever the number may be. And then you favorite your property. You mark your favorites. We'll tour those properties. We'll write a CMA for you on the one that you like. We don't do a CMA on every property. You look at 5, 10, 20 homes or whatever it is. When you say, I like this one, can you write a CMA for me? That's when we do it, because it takes us time and effort. Then we'll help you write an offer, and when the seller accepts it, escrow is opened. Now this is interesting because once escrow is opened, you're now working with 3 different parties. Number 1, your realtor. Number 2, your lender. And number 3, your escrow company. 3 different parties that are all helping you move toward the closing process. So here is another visual. Once we get to this part of the deal, when the escrow is opened, it splits into 3 lanes. First lane with your realtor, second lane with your lender, third lane with your escrow company. So you're going to get a loan estimate from your lender, and right away your realtor should help you schedule a home inspection with a home inspector, a professional home inspector. And at the same time, in the first 3 business days, you'll be depositing your earnest money. We're going to talk about more about that later. Stay tuned so we can go through all these steps and you know what to expect. So loan estimate, home inspection, deposit earnest money, all at the same time in the first week. Then you might request repairs after your home inspection or negotiate some sort of credit with the seller. At the same time, you're locking in your interest rate and your terms of your loan with your lender. And at the same time, you're signing escrow instructions. We'll talk about those later. Then, once you have finished negotiating your repair request with the seller, you'll remove your inspection contingency, which is your right to back out, while inspecting a home. We'll talk about more of that. We'll talk about that more later. You'll get your home insurance quotes and submit those to your lender, and then you'll get an appraisal from your lender, or from the appraiser that's assigned by your lender, to be technically correct. Once you get that appraisal, if that appraisal is below your purchase price, you have the right to walk away or renegotiate, unless you've given up that right in your offer. You need to talk to your realtor about that before you make an offer. But let's just assume the appraisal is fine, it's at or above the purchase price. You can then remove your appraisal contingency and move forward and sign any amendments to your escrow instructions. Then, once your lender tells you your loan is conditionally approved or finally approved, whatever gets you close enough to the point where you're comfortable removing your loan contingency, you may then remove your loan contingency. And then you get a closing disclosure from your lender, you do a final walkthrough, you send your down payment to your escrow company, you sign the loan documents and final paperwork with your escrow company, funds are sent to escrow from your lender, and then the deed is recorded and you receive your keys and move in. I know it's a mouthful, and that's why we're going to go through the next few steps in more detail so that you know what to really expect when you get into each one of these steps. So creating your wish list. What are your must-haves? What are your deal breakers? What are your wants? What are the things that you prefer, but not necessarily a deal breaker? Things to think about are location, bedrooms, bathrooms, size, amenities, schools, and whether you're okay with a fixer or whether you want a property that's turnkey. There are different dynamics to each deal and each market, and your realtor should be able to advise you on such. Now, getting a pre-approval. Your loan officer will determine your loan amount and then give you a pre-approval. That will help you understand how much home can I afford to buy. And in today's market, having a pre-approval in hand is a must before searching for a home. Now let's get into the search process. Your realtor can create a very customized search through the MLS or through their website like this. And when you get properties that you like, we encourage you to hit the, click the heart button, save a favorite so that your lender your realtor can see which ones are your favorites and say, would you like to go see your 2 or 3 favorites that you've marked this weekend? They'll set up a tour for you so you can go look at them all at the same time and be efficient with your time on the weekend, for example, or after work or during lunch, whatever is convenient. And then once you like a property and say, I want a CMA because I want to write an offer, we'll do an analysis for you. This analysis will give you an idea of what other similar homes in the area have sold for so that you know if the home that you're looking at is overpriced, underpriced, just right, and how competitive it may be and how competitive you can be and still be within some sort of range, which the appraisal will hopefully confirm later. Once you're ready to make an offer, we have these wonderful forms which have been prepared by the California Association of Realtors, which are very long, but a good realtor should be able to explain them to you thoroughly and give you an idea of what you're signing before you sign it. Of course, it's encouraged that you review with an attorney if you have real deep legal questions, but the realtor should be able to guide you on the general concept of each thing that you're filling in before you sign it and submit it. We'll help you develop the best strategy in making an offer and negotiate and navigate any counter offers or multiple offer situations. So if you make an offer, the seller wants to tweak a few things, they'll send you a counter offer. Then you can send them a counter offer if you want to further tweak a little bit, and then they'll send you maybe a final counter offer, and then we ink the deal and we finally have an accepted offer. Once it's accepted, we open escrow. Yahoo! This is now the 3rd stage if you remember that first screen that I showed you. We went over these already, and this is a review. And once escrow is opened, you'll send your earnest money deposit within 3 business days to the escrow company. Then you will sign your escrow instructions, which usually include things like the preliminary title report, which tells you who has an ownership claim to the property. Property tax investing information is you telling the escrow company how you would like to record title. Are you married? Are you single? Do you want to be a joint tenant? Do you want this to be community property with rights of survivorship, meaning it automatically goes to the surviving partner in a partnership? So those are the little nuances. And you also get a natural hazard disclosure report telling you, is this property in a high earthquake zone? Is it in a high fire zone? Is it in a high flood zone? Those are very important things to know before you remove your inspection contingency. Now, the 3 major contingencies that we're going to talk about are the inspection contingency, the appraisal contingency, and the loan contingency. Now, the contract used to have these as 17, 17, and 21 days, and now they're all 17 days, and it could be different when we talk in the future, but these are negotiable timelines. A seller can ask you to shorten them, and it's between the buyer and the seller to agree on an appropriate timeline. So especially if this is a multiple offer situation, they could be asking you to do everything in 7 days instead of 17 days. That's something to get your realtor's advice on so that you can make a prudent decision based on their experience and what they've seen go well and not go well. So inspect your property, hire a professional inspector, and if you're in an HOA, like a homeowners association, such as a condo, townhouse, or even a detached single family, which is in a community, a homeowners association community, you should review the homeowners association documents like the annual budget, the reserve study, the meeting minutes. See what people are talking about and complaining about in the meetings, or what they're happy about, or what they want to happen in the future. What is the maintenance required? What's deferred? How much money do they have saved in reserves to afford future repairs in the HOA? Are there any special assessments proposed? Any litigation against the HOA? You want to know all that stuff, which your realtor should be able to help you get from the association prior to removing your contingency. That is very, very crucial, and so many people don't do it. I cannot tell you how much that frustrates me. So next up is the appraisal contingency. When you receive your appraisal from the appraiser who sends it to your lender and forwards it to you, the appraisal should be at or above the purchase price. If it's below, that means the appraisal believes that the purchase price is too high, and you can renegotiate or back out of the contract and get a refund of your earnest money, unless you waived that right initially in your very first offer. Something very important to talk about with your realtor prior to making an offer. Lastly, the loan contingency is when the lender collects all of your documents and says you are conditionally approved. The only thing I need is one more bank statement that shows that you still have that money in your bank account in 30 days before we close. That's easy to remove loan contingency. But if your lender says you're conditionally approved, I still need to verify something major, which could be a huge deal breaker, don't remove the loan contingency until you're ready, until you have an approval from your lender to remove your loan contingency. Now, home inspection, here's just a quick sample which shows you, they'll point out things that need to be repaired or deferred maintenance or recommended upgrades, and you can discuss those with your realtor and your home inspector. You'll get a buyer's inspection advisory, or you should, from your realtor, giving you other ideas of things to think about or inspect prior to removing your inspection contingency. Now, once you get the inspection report back from your professional inspector, you can use some third parties like these guys to give you a general estimate based on their research of what these repairs might cost. Or you can ask real contractors or handy people to come to the house during your inspection period and give you real quotes so that you know what your liability might be before removing your inspection contingency. These are all crucial things to do before removing your inspection contingency. Now, once you know how much these things are going to cost you to fix, you send in a request for the seller to repair them or give you a credit so that you can repair them after closing. That's my preference because typically sellers do the bare minimum to close the deal. And as a buyer, you might want it done right, or you might have some specific way of getting it done. So anyway, my recommendation is credit, but whatever the case may be, you make that request on a form, you send it in, and then once the seller agrees or you guys have some meeting of the minds, you would then remove your inspection contingency right there. So now we're moving on. You are reviewing the loan estimate with your lender. You're getting your documents in. The lender may ask for additional information. You lock in your interest rate and your terms. You receive the appraisal. You receive a final loan approval or a conditional loan approval, which is so close that you're comfortable. And once you're there, you can remove your loan contingency and potentially your appraisal contingency. Well, actually, I should say appraisal contingency and then potentially your loan contingency, because you usually get your appraisal first. But that's when you can finally remove those contingencies, when you are finally comfortable with your loan and the appraisal together. Now, this needs to happen actually before the loan is finalized. You need to get your homeowner's insurance and submit it to your lender to make sure that the property is insurable, especially if you're up in the mountains or the hills in a high fire hazard zone. You may be paying way more for insurance than you initially anticipated. So definitely look into this prior to removing your inspection contingency. That's my recommendation. Now, in your last week of escrow, you will do a final walkthrough. You will sign your final loan disclosures and you will wire your remaining down payment. And then you will sign a loan package at escrow with your escrow officer or the notary, who will send it to your escrow officer. And your lender will send in the rest of the funds to escrow after you sign the loan package. And escrow records the deed on the property on the closing day. Congratulations, you just bought a house. Once you get that situation settled, you get your keys, you prepare to move into the house. This is another review of what we just went over. Remember these 4 major stages: getting ready, searching, escrow, closing. You see most of the action actually happens in escrow. And that's really where your realtor can advise you a lot, besides obviously helping you pick a property and negotiating in such a way that benefits you and protects you while helping you still win the home. Here's a roadmap. Once again, you start with the realtor and then it splits into 3 lanes with your realtor, lender, and your escrow company. This is our team. In case you're curious, this is me, Marcus. This is my wife, Helen. And we have some wonderful team members, Marie, Ashley, Kevin, and hopefully we'll continue growing by the time we meet you. Our modus operandi is to treat others as we would like to be treated, which is the golden rule in the real estate code of ethics. And it is also in the Bible, Matthew chapter 7. Look it up and read it. Our commitment to you is obedience, loyalty, disclosure, confidentiality, accountability, and reasonable care and due diligence. What does that mean exactly? Obedience. When you want to see a property, we're going to get you in there. Loyalty. When we're negotiating, we're on your team, not theirs. Disclosure. If we see something that we think you should know, we're going to point it out. We're not going to cover our eyes. Confidentiality. What you tell us in confidence will remain with us. And accountability, unless it has to do with being qualified to buy the property. Then we want to tell the seller, hey, our buyers are qualified, so that the seller is not hesitant to accept your offer. Accountability, when you send in your earnest money and your down payments, we'll be chasing down receipts from the escrow company so that you know where your money is sitting. And reasonable care and due diligence. When you're negotiating on a property, we're not going to tell you just pay whatever the seller wants. We're going to do our research with you, help you make an informed decision so that you feel comfortable with your decision to move forward. Some fun highlights of what our clients have experienced. We've sent postcards to find properties off market. We don't charge our clients for that. We've had great success negotiating for our clients. Actually, in addition to the ones you see on the screen, we've saved over $100,000 on some of our larger deals. $250,000 actually off the list price on a recent deal, but that was a $4 million deal, so it's not in here yet. But long story short, our clients have had the fun opportunities to go to sporting events, private movie screenings, specialty food clubs, Dave & Buster's, all kinds of great stuff, because we love to say thank you to the people who have trusted us. We love you guys. We have great 5-star reviews. You guys are happy to you're welcome to review those on all these websites, ZillowRealtor.com, Yelp, and also Google Now, which I haven't added to this slide yet. But if you're also curious on how a realtor gets paid, I'm going to pull back the curtain and show you everything right now. The seller typically pays some lump sum percentage to the listing agent. The listing agent will typically keep some for themselves and share some with the buyer's agent. That's how we get paid. We don't want to collect anything from you if possible. Now, we welcome you to reach out to us any way you'd like. This is my cell phone. This is my email. We're on Facebook, YouTube, Instagram, Twitter, Zillow, and our website is teamibrahim.com. We would love to hear from you and answer any questions you have about your specific scenario or the market at this given time. We encourage you to reach out, and we can't wait to see you succeed in buying a home that meets your needs. Talk to you soon.